Dear students, in this video we learn the format of profit and loss account, that is income statement. The chapter bank accounts under the subject corporate accounting. So we have four heading. The first heading is Roman letter 1 income, the second heading is Roman letter 2 expenditure, then the third heading is profit or loss, the fourth heading is appropriation. Before that, draw three columns. The first column is particulars, second column is schedule number, the third column is amount. Instead of amount, you can also write the year ending. For example, if the accounts are closed on 31st March 2020, instead of amount you can write 31/3/2020. Now let us see the format elaborately. Roman letter 1 is income. It has two subheading. The first subheading is interest earned. Interest earned is nothing but interest received. That is scheduled as number 13. Then B, that is second subheading is other income. Other than interest income is come under this category, other income. That is 14, like exchange, brokerage, commission, profit and sale of asset and all come under this category. So the total of 13 and 14 will be named as A. Then Roman letter 2 is expenditure. We have three subheading. The first one is interest expended. Interest expended is also called as interest paid. Next is operating expenses. Other than interest expenditure come under this category. It is scheduled as 16. So interest paid is scheduled as 15. Other than interest expenditure is scheduled as 16. Then next is provisions and contingencies. All the provisions like provision for bad debt, provision for taxation, provision for depreciation come under this category, and there is no schedule number for this, but you have to open the schedule separately. Now the total of 15, 16 and provisions and contingencies will be named as B. Then Roman letter 3 is a profit or loss, that is net profit, A minus B. The total of income is named as A, the total of expenditure is named as B. So A minus B is a net profit. Now in some question, profit for last year will be given. So if it is given, so two balance brought down, profit given in the question. Write it here, then you total. Okay, the moment you find the total of Roman letter 3, the same total should be entered for Roman letter 4 appropriation. Now here if a 300, here also the total must be 300. Now we have only one important provision, 25% of statutory reserve. Statutory refers to legal requirement. All the bank, they have to create reserve, they have to calculate reserve from net profit, 25% compulsory. Then transfer to any other reserve if means it is not compulsory. If it is given in the question like transfer to revenue reserve 10% means we have to transfer from the net profit. If it is mentioned, you have to calculate it. But whereas statutory reserve, whether it is given in the question or not, it is compulsorily, because statutory means legal requirement. Always it should be calculated from net profit. Now profit carried out to balance sheet. So from the net profit we will calculate the revenue reserve. Now this minus this will become profit carried out to balance sheet. Now I also illustrated the format with the amount. So that is schedule number 3. Interest earned is entered as 800, 14. Other income is 200. Now the total of income is 1000. 800 plus 200 is 1000. That is A. Then interest expended 400. Operating expenses 300. Provisions and contingency 100. The total of these three comes as 800. This is renamed as B. Then net profit A minus B. A total is 1000, B total is 800. 1000 minus 800 become 200. And then profit for the last year is given in the question. Let us assume it is 100. Now 200 plus 100 become 300. The moment we find the total of Roman letter 3, the same total should be entered for Roman letter 4 appropriation. Now 25% of statutory reserve is compulsory. So the net profit is 200. 200 into 25% becomes 50. Now here we have the total of 300. 300 minus 50 become 250. So this is the profit carried down to balance sheet 250. This will carried out in schedule number 2 under the heading reserve and surplus in the balance sheet.